What does it look like to back a founder, not just at the white paper stage, but through scale, token launch, and regulatory complexity? Today, I'm joined by general partners of SMAPE Capital, Astrid Woolard and Alexander Lenz. As GP and CIO, Astrid leads research, due diligence, and investment management. As GP and COO, Alexander focuses on investor relations and fund operations. This episode is all about how they deploy capital, manage risk and growth, and define what real traction looks like in crypto. Thank you for joining me today.
Thank you for having us.
Thank you for having us.
So, let's begin with your professional backgrounds. Before SMAP, what fields or roles did you each start in, and what led you to focus in on crypto as an investment space?
Well, I'm actually a trained natural scientist, and I quickly forayed actually into innovation management. So it was always my interest to be at the intersection of new technology and how it could be applied in the real world. And then about 12 years ago, friends of mine founded and built Ethereum. This was sort of my first entry into the crypto space. And from then on, I quickly transitioned into venture capital, helped set up a deep tech fund in Austria, then became managing partner of another crypto fund, and then a few years ago decided with my colleagues to actually found SMAPE Capital, where we are supporting early stage Web3 ventures as well.
All right.
I have a background in economics and business administration, right? I spent more than 15 years in banking, advisory, private equity before turning into a full blown kind of crypto investor in 2022. The reason why I transitioned my previous full-time employment in the TradFi industry into this new technological kind of advancement of the internet and how we live and work and together and how the economy works together was that um, I found that traditional finance was getting more and more boring. Kind of, it was more of the same. And at some point, I thought, there is there's not that much technological advancement that I've seen so far. So I wanted to kind of jump on the bandwagon before turning 40, just to experience something new. And this is why I devoted 100% of my time to startup businesses from then onwards.
And what's the core investment thesis behind SMAP Capital now? And what makes a project SMAP worthy?
Mhm. Well, basically, the core thesis is that tokenized economies will take over time, and that this is really a technology that's here to stay. So we're still at very early stages. So we are aware that user experience and some other kind of things in Web3 need to be improved. But in general, it's a very powerful piece of technology. We are very infrastructure agnostic, so we're quite happy to support multiple ecosystems. We actually believe in a multi-chain world where several layer ones will actually have their prime use cases and will work on that respect. And in terms of what makes a cut also into SMAPE is that for us it's important that we see a product that is innovative, that has really a market need, and where there will be users that will actually be interested in using that. These users can be obviously people like you and me, but it could also be businesses, right? So there is always the B2B and the B2C angle. We're quite happy to support both in that respect. So we need a good product market fit. We're looking for exceptional founders that are really driven to make their vision a reality. And obviously, token design is also something very important to us. While we can take any kind of classical investment instrument like equity, convertibles, whatever, we really have a strong focus on tokens. And it is quite important to us that this value accrual is also reflected in the token design.
And could you please take us inside your due diligence process?
Mhm.
What signals matter most, and what red flags do you catch, which others may possibly often miss, actually?
Mhm. Yeah, I guess that it's as an venture capital investor, you need to sort of build over time a very good piece of gut feeling.
Mhm.
So sometimes it is just more the soft facts rather than the hard facts that really matter when you actually make an investment decision. So also with founders, I think we've developed a very good gut feeling where we say, okay, these are trustworthy, coachable individuals that actually also react to feedback, which is very important when you come into very critical stages where maybe ventures need to pivot, they need to change something about the business model or the token design. It is very important that these then are people that are actually happy to take feedback, are not shying away from taking feedback from investors and making really the most of it. Because we totally appreciate you cannot know everything, right? It's also a very novel field, so many things that need to be tried and tested. And so it's very important to us that we see really driven founders that are in it for the long term and that are open to constructive criticism. Yeah.
How do you manage investment risk in such a volatile crypto space?
Mm. Yeah, I mean, this is sort of where we also try to conduct very thorough due diligence on the early stages. I mean, early stages as risky as it can get in any event, right?
Mm.
Because a lot of things could just be going bust tomorrow, right? That's the game of venture capital, early stage investor. But what we try to do is that, again, have a very thorough due diligence. We also have a suite of 8 advisors that actually help us conduct technical due diligence, also legal due diligence, that we said, okay, from a regulatory perspective, is this actually a business model that can operate in certain jurisdictions or not, or most target sort of customers. And also on the technical part, we have a subset of people that have been founders themselves, that are validators, for example, so they again bring a very different kind of perspective into the ventures. Like, is this something that a validator would actually subscribe to or not? Are validators well enough incentivized to be actually running your network? And this is something that is also often overlooked in the due diligence process. So we really try to tackle sort of the ventures from very different angles. We also get character references from founders. So we ask around also in our network, because we have a very extensive network also with other investors and also Web3 partners, where we also cross-check on, have you worked with this individual? Are these connections that they're claiming to have really true? How do they operate under stress, and all the like, yeah.
And are there any common blind spots founders have when pitching to Web3 funds?
Very often they're very technical and they're very married to sort of the technical aspects of their product, but sometimes just forget on how they will actually go to market. What is their listing strategy? How will they build a community around it? So these are really sort of aspects where we feel that also investors can bring a lot of value, and where there's still also a lot of opportunity for new talent to actually enter this space and come along. So like, look, I'm a very talented marketeer, for example. I'm a very talented BD person that has certain connection in a certain area and whatnot, to actually help around. So these are sort of the areas where we feel like it could be better, right? So usually the very highly technical gifted people, but more on the business side, sometimes they would need another, founder in that area, or just very, very solid team as well.
Interesting. And after you invest, how do you help teams grow? Maybe on those fronts as well that you have just mentioned.
Mhm.
Do you follow a structured post investment model?
Well, it depends really highly on the ventures themselves, I need to say. So everyone has a different kind of need. Some just need connections to other funds to, for follow-on rounds. Some of them need more thorough advisory in terms of token design. Some will need connections again to the Web2 world, to customers. So we're quite happy to help on all these aspects as much as we can. So we check in at least once a quarter with portfolio companies, but we have an open door policy. Everyone knows that. We also have our own portfolio group, also on Telegram, where people can actually ping each other, also make collaboration. So we have actually a lot of sort of cross collaboration within our portfolio, which we really love and are excited about, obviously. So we're trying to be supportive as much as we can. We also have two very lovely venture partners who also support us with their network, again, with further investors, marketeers, whatnot. So these are all networks that we can tap into.
And how involved are you in helping projects set and hit growth milestones?
Mm. Well, again, as much as we can, we're very happy to support. I'm also, what I always say to people, 100% confident if you just pick anyone out of a portfolio and just ask them what did SMAPE do for you. They will say like, yeah, really great investors. We've worked really well with them. They've been supportive in A, B, C, D, right? So I would say we're a very helpful and hands-on investor because we recognize that if our portfolio ventures do well, we will also do well in turn. So it's really a win-win relationship for both.
And how do you measure what real traction looks like?
Well, for us, it's also just, I think, also classical
Yeah.
Web 2 world, right? Users and sort of adoption.
Adoption.
So both in the real world, sort of with Web 2 companies, with businesses, right? With users that are just using the next DeFi protocol. So these are all sort of indicators how we would also measure success, right? Sometimes it takes a little bit more time until that is also reflected in token price, for example. I mean, we should not forget these are young budding businesses. They will not, work perfectly overnight. There will be also changes to the roadmap and also to the product, depending on user feedback. So, but we would measure just very similar to any classical VC as well.
Let's talk about tokenomics. Token design can make or break a project. How early are you evaluating tokenomics during your investment decision?
Ah, immediately. Well, it's very important to us. I mean, we totally recognize that venture will not have a fully fledged token flow model on day one. It's totally fine, We can help them also in this process and really have sort of several sessions, giving them feedback on their design. We have done that frequently. But it is also very important to us to see sort of the broader vision of where this product goes and how the token could potentially be used. And what we've seen in the recent, years is that if you have a token model that is only based on transaction fees and governance, usually that's not good enough, right? Because there are just not enough users still in this space where you say like that these flywheels really work out. So you really need to think about first, do I really need a token? I mean, there's so many projects out there that really don't need a token. And we also say that openly in our due diligence calls, we say like, well, we really think you are actually a SaaS model, right? And that's also fine, I mean, it's also very good, business models that worked out for many, many years now. So it's totally fine. Um, but yeah, we always urge founders to think about, okay, who are the different stakeholders, how could they be incentivized, how could the token be used, and really think about creatively sort of what could really make this token work over time.
What's your view on lockups, vesting, and aligning founder incentives in token ecosystems?
Hmm. I think lockups and vestings are a good tool. And but we have also seen sort of this new sort of fair launch strategies where there are no lockups and no vestings, and everyone is open. I think there are many sort of different sort of strategies that are being tried and tested. Again, it's a very young field still, one has to say, but a number of years that it's been commercially used. Not just counting just the academic part of it, that was almost 20 years before that, right? And yeah, so we feel that we only want to be part of ventures that really have a long-term vision. So we're not in it for the quick coin flip. So that's not really of interest to us. We want to be supporting innovative ventures, something that really brings use to the world and is not just something where the founder says, okay, after 6 months I have my exit and I'll be gone, right? So this is not the kind of game that we want to subscribe to.
Then, how do you balance long term value creation with short term liquidity strategies?
So for us, we do have a mandate to invest into ventures on a long-term basis, right? Of course, there might be opportunities in the market that one can only capitalize at the very moment, right? If we see such opportunities, we can do them, and we are actually deploying on those as well. However, it's not our main focus, and it certainly doesn't make up a large part of our portfolio.
Mhm. Are there moments where You've passed on a promising team because the token structure just didn't make sense, or maybe something else between the founders. For instance, the relationship between the founders.
Yes, absolutely. I mean, this happens several times, I would say, yes. So basically, when we feel a token doesn't make sense, we will say that openly and we say, like, look, this could be very well an equity model, this could be very well a SaaS model. Let's find an agreement here, and then we'd be happy to invest because otherwise it's an exciting idea.
Mm.
If that doesn't, happen, then we will also walk away from the deal as well because we're not in the game of supporting tokens that should just not be there, right? We have had also opportunities where we felt a technology was really interesting, but we felt that just the relationship with the founders just didn't work out one way or the other. This is why normally also we have a first call where we have a very light touch just conversation with founders. We just see like, okay, how can you talk to them, how they're reacting to different kind of questions, and only then we will subject to them to deeper technical due diligence and sort of all the other topics that we have around go-to-market, community building, and whatnot else. Yeah.
Regarding capital deployment and portfolio construction, how do you think about timing? Is there such a thing as being too early even in crypto?
Yes, I mean, if you look at also the history of crypto, for example, so prediction markets, yeah, there was one of the earliest projects in Ethereum was Augur, for example, right? It was also a prediction market, but it was just too early. There were not enough users there. Maybe the technology wasn't quite there yet, right? But yet we have Polymarket today that is super successful, is being used, even in Web 2 sense and stuff like that. So absolutely, you can be just too early as well with your product. And this is, I think, also something that we need to be mindful sometimes where we feel like when we look at timelines of a fund, for example, and we know that we need to return capital to our investors by a certain date, we need to think like, okay, is this actually a venture that we will be able to exit in a sensible way on day X, right? And we have said also no to some companies where we felt like, well, they probably need a few years longer than we can actually really take in this fund, unfortunately, because we felt that maybe the business model just needs longer time to mature. The token will also take more time to get adopted. So there have been cases like that as well. Yeah.
And how are you balancing exposure across early stage projects versus more mature and scalable ones?
hmm Well, basically, we are an early stage investor. So the majority of our investments are really in pre-seed seed. Having said that, we have had some opportunistic liquid bets as well recently where we felt that, these could very well be also very good investments. And so we also took these opportunities as well. Yeah.
Do you build or plan to build thematic clusters like DEPIN, L2 infra, or real world assets? Or is each investment completely standalone?
Well, we have built clusters, for example, on privacy technologies, where we felt there are different set of privacy technologies that might suit different needs. So this is where we have supported four different ones for between TE, zero knowledge, and other approaches that we have seen. Also, in terms of DeFi, there are certain sort of buckets where we felt okay, each of them are tackling a different kind of problem or in a different kind of way. So we're quite happy to support them. Then sort of Bitcoin and Bitcoin ecosystem is also sort of something where we're looking to invest even more. We have sort of Strum on one side that is sort of opening up sort of the whole Ethereum DeFi kingdom to sort of Bitcoin holders. We have also sort of a deepin slash also sort of again part of Bitcoin ecosystem deep protocol that is sort of also going more into sort of green energy sort of certificates and trading and all that. So there are some certain clusters that we can also see. Also around AI, for example, where we have one AI platform that's helping you build up sort of your own AI agents and sort of the framework to that. Also an AI inference technology that is also helping sort of around AI verifiability. So there are some certain clusters where we also see strategic sort of need and where we hope that also they will collaborate with each other, and a lot of them are actually. But we're also looking to expand it also in the future more into sort of decentralized science, decentralized space tech, for example, or defense tech, for example. So there are certain clusters also in the future that we're looking to sort of deploy more in sort of a kind of vertical sense. Yes.
Alexander, how do you maintain institutional grade processes in a market that runs so fast?
It's actually not very difficult to do that, because it all boils down to, let's say, two or three things, right? One is from a corporate structure perspective, you just need to do the things that the corporate structure requires you to do. Otherwise, you don't have a fund in the first place. Second thing is you need to be compliant with all of the regulations that actually affect you. um, and they are we're very well positioned in this respect because we're working with a lot of partners that have been doing this for quite a while and hopefully will be doing this for quite a while, together with us. And maybe a third point to add is, on the LP side, right? So on the investor side, there is no kind of, I would say, common standard for institutional grade processes. I think you can just follow along the processes that, for example, big listed companies follow, right? They are usually open. They inform their investors on a at least quarterly basis. You publish results on a quarterly basis. You report progress on a quarterly basis at minimum, right? And in addition to that, I think it all boils down to what essentially we are comfortable with sharing in addition, of course, with our investors and with our community, and what we think makes sense to employ as kind of additional processes on top of that. But the institutional grade stuff is actually pretty easy to maintain.
What's your approach to fund risk, both on a per investment basis and across the whole portfolio?
So that's again an easy one, right? Because the most of the work that you have to think of, or most of the things that you have to think of, are you have to think of upfront, right? You cannot just go and fundraise for a fund without having a principal idea on how your portfolio would look like when you fully deployed, right? So you go in, you have a number in mind, and then it's all about ticket sizes, number of portfolio companies, resources available in order to manage both the investment process as well as the investments after you've invested in, right? And then finding kind of a suitable, exit strategy, or kind of exit liquidity curve for the fund to return capital. Now, when we raised for our first fund, and we'll certainly do the same or have done the same when launching a second fund, is we think about the size of the fund that we want to raise, right? In our first instance was $6.5 million worth of capital, right? We would spread that $6.5 million across roughly 30 portfolio companies over 3 years investment period, which makes 10 investments per year, give or take. Ticket sizes varying from 150 to $250,000 per ticket, right? So, and if you do the math, it all comes nicely and neatly back together, right? And even though we're a small team, but supported with our very nice suite of advisors and venture partners, right? We think we can manage 30 portfolio companies in the end, right? Because it's a very kind of, maybe longer investment process until you get to a decision. You do a very thorough due diligence, right? That consumes resources. But then those companies, when you invested in them, they're also not launching all at the same date, right? So we are in a position where actually we can also support the portfolio companies after we've invested with resources that are available to us, right? And not just spend money and then walk away and see if there is some return at some point in time. So this is all of the things that you have to think through before actually launching it. And if you can present investors with a vision, with the required kind of math and the magical triangle of the things I've just said, I think it all comes together very nicely and neatly.
How do you report on progress to LPs, especially when so much crypto is still experimental?
That's a tough one. So I cannot tell you how one does it. I can tell you how we do it. We've always been very successful or very kind of fortunate with feedback that we get on our investment thesis, our fund, and the performance of our fund when we communicated everything open and honestly and as transparently as possible. For example, the quarterly reports I just mentioned before, they're a standard, right? They're given. But every month we write somewhat of a Bezos like letter to shareholders, to all our LPs, that of course include the latest developments, not only for our investments, but we provide them with a monthly snapshot on where we think the market is, what has been happening, where we think the market might be going, what this means for our thesis, what this means for our investments, and also kind of providing them a little bit of an outlook on what comes next, right? I think in this way you're not in a you're never get into a position where somebody would actually say, well, I didn't know this, how could you? And somewhat turns into a struggle or into a hassle, right? Everything is communicated as open and honestly as possible. Now, in this very challenging market, obviously communication is key, right? Because a lot of things can happen and a lot of things can happen very fast. And a lot of things can happen not to our kind of advantage, right? So in some way, shape, or form, you need to provide guidance and also your view on the world, so to say, in order not to kind of unnecessarily frighten or make LPs anxious or scared of what is happening, right? I mean, we're early stage investors. We know venture risk is different to saturated market risk that you're taking. There is somewhat limited potential to hedge such things, and sometimes you just need to sit through. And the sitting through part is actually where our vision again comes in, right? Because we're in it for the long term.
You have rooted SMAP in European values. How does that shape the way you operate and deploy capital?
We're all Europeans by heart. We do represent a set of, I would say, truly European values that we also stick to in our due diligence process and how we value investments and the founders and the opinions of our founders. Now comes the but. But Web3, by definition, is global. There is no such things as, state boundaries for Web3. Where boundaries come in is maybe on the regulatory side, right? On the approach on how to solve problems, on where to settle your company, which kind of people you onboard, where you find best resources in order to develop the product that you have in mind, right? Um, and here we're completely agnostic, so to say, if it's a good product slash market slash value fit, right?
I think in general, one should always consider these regulatory developments as a positive thing because it means there is already a certain, threshold of users in this space, and we have seen through the NFT and the meme coin craze, right? There will always be people who abuse sort of new technology and sort of unregulated fields as well. So in general, I think it is positive that at the time also the EU made the step and said like, look, we're going to build up MiCA. We provide for a clear regulatory framework in which sort of these companies can actually build their business models and sort of really grow innovation. Obviously, there are parts that could be improved and all that, but I fear in general that it's a positive development for the whole sort of ecosystem as such.
Are European founders approaching Web3 or tokenization differently than their US or Asian counterparts?
I think as Alex already said, since it is in any ways a kind of business that you need to consider doing at the global scale, not only localized. If we think about tokenization in terms of utility tokens and really the
Mm.
business models, not as tokenization of real estate, for example,
Mm.
right? So if we think about tokenized economies as such, since they are on a global scale, they will need to think global from day one. The ones that will just think too localized will not be successful in any event, right? So this is something also that we have seen time and time again.
Mhm.
But this is also something that we also pick up in due diligence when we say like, okay, who is actually your target market? How will you get to your users? That this is something that you can already pick up early on.
What's one crypto investment segment or thesis that you're leaning harder into this year? Just pick up just one.
In general, I think would be the machine-to-machine economy. I guess you have so many different sort of technologies around it, robotics, AI, right? I mean, there are more machines and IoT enabled devices than there are humans, right? So, and they need to be connected. And I think also, as already CC said, I mean, crypto is perfect, just made for machines and for AI, right? So, in general, I think that is a very sensible theme to deploy into. But as I said, there are many other things sort of that we're looking to as well.
Is there a shift you've made in how you approach growth stage investing versus 1 year or 1 year and a half ago?
No, not really. I mean, I think that again, we look for the same kind of principles in terms of the product, the placement, the positioning, product market fit, the founders. So we keep on doing that due diligence. We also, have always in mind sort of what regulatory developments are. And again, we're very fortunate here to have all our advisors that are working hands on with us on this, where we get early sort of already visibility into new legislation that is being built around the world so that we can already factor that in. So I think that hasn't quite changed. The only thing that has changed is that we say like at the beginning we were still very much strong infrastructure focused, whereas like there was still a lot of need for supporting sort of basic infrastructure around Web3, and now is really a good time to lean more towards sort of applications of Web3. Having said that, we don't mean sort of supporting sort of these loyalty points kind of systems, but really still sort of like what we still would say, like maybe infrastructure centric, decentralized applications. So really novel innovations happening in sort of Web3.
What kind of founder or project are you hoping walks through your door tomorrow?
If another Philip Zentner would walk through our door tomorrow, we would probably invest in him again, right?
Or Marcel Foreman as
Or
well.
Marcel Foreman,
Yes.
exactly. Yeah. Or Mary from Orochi. I
Yeah.
think she's also a very very dedicated founder. Or Tom from Riddle.
Mhm.
Um, or Yannick
Yeah.
from Arcium. I think so. So these are personalities that combine a certain business acumen with expertise and drive all together, right? They don't know all of the details, I would say. I mean, forgive me, anyone who I just mentioned, if I made a wrong statement there, but they know how to navigate and they know how to make progress, right? And this is actually something that we love to see.
Yeah, I think it's really about, a founder obsessively solving tomorrow's problems, and problems that we might not be aware of yet, right? So we're not interested in sort of like these incremental updates and yeah, okay, fine, nice. This is now not red but blue, but essentially the same, something like that. So it's really something visionary, someone who really has a very good idea and also a clear vision of where to go. But really not trying to chase narratives of this cycle or last cycle or whatnot else, but really thinking about, okay, what is the product that we will need tomorrow? How should that look like? And how will I get there? No matter, what narratives are swinging around me next, left, and center. Right?
This was a rare look inside how a fund balances hands on founder support with serious capital discipline, and how SMAPE Capital is helping shape the infrastructure of the token economy at scale. Where is the best place for listeners to follow your thinking or get in touch?
Well, we have a LinkedIn presence. We have also a Twitter presence. We also have a website and a blog. So these are all opportunities. And other than that, catch us at an event where we'll be next. So also in person. So plenty of opportunities.
Astrid, Alexander, thanks for making the investment side of Web3 just a little more transparent. And to everyone listening or watching, if this episode gave you a more grounded view of how crypto funds really operate, like, subscribe, and share it with someone curious.